Hello, everybody. This is John Breland with Trading with Confidence. And in my last video, I was suggesting a short on Ethereum right up here because I did see a front divergence and back divergence on the surge. And the back divergence would be between the price here and the front divergence between the prices here. And that I expected a short, but out of the blue came a strong green candle. And then we peaked up here and it looked like it was topping up here, but then we have another green candle. However, the signals that we receive on the surge can also occur where there is a final front divergence that can occur here. Okay, and that would mean that we could experience another peak area up here. So let's keep in mind that we have a pretty strong uh, resistance up in this area. So we've had a hit. We've had it hit here from up above. We've had it. It went through a little bit here. It hit here, went through it, bounced on it. So this is certainly a resistance area, and we haven't quite achieved it. We can probably call this a range because we also have resistance here, which became support. So we're right in the middle of this range of resistance. So it's very possible that we will see a turnaround up here with a divergence on the stochastic RSI. So that has yet to have happened. This is the daily chart, so this could happen in the probably early to mid next week. And if we look at Bitcoin at this, I mean, these markets are pretty much operating in synchronicity. With Bitcoin, the short would have been up in this area. But what's interesting is that the stock, I'm sorry, that the surge pattern didn't quite match for a short up here. However, it is starting to possibly appear now. So what may be uh, a single back divergence, then front divergence, or possibly a, a double divergence here with a stochastic. This is going to move up and moves up a little bit more, then the stochastic would, I think, would surely produce a divergence on price. So this is how I'm seeing the market, and the reason. Let me explain like another reason why I believe this to be the case. So if we look at go back to Ethereum. This one? Oh, this is a different one. So if we go back to Ethereum, let's pull up the 3-day here. So let's get rid of these things here. So if we look at the rate of motion, okay, so this would be how fast Ethereum moved down. And you can see that this rate, I think it was matched here too. Pretty much matched there by the time it got to the bottom. It went around this fast. It went fast in the beginning, then slower. But let's look at the rate of movement from this low to this high. And let's compare it with what's going on here. So as you can see that if this is indeed a top, as noted by the stochastics RSI and by an impending uh, surge back divergence here, we can see that the rate is a lot slower. So it's essentially for the same time period, the the rate of descent here is faster than the rate of ascent in the same time period. That is typically indicative of a bear market. So a bear market is where the the rate going down is faster than the rate going up. And what caused this rate to slow down is a lot of this bear motion right here. Now we didn't create a new bottom here. So but that move down caused the rate to be slower. So this is the rate of up in a bull market, and this is the rate of up in a bear market. So it tells me that we're in a longer, possibly a longer term bear on on Ethereum. A lot of it depends on what is happening here. What happens here? I mean, it could be super strong and get up here, and then the rate becomes just as fast. But I don't know. I don't. That's kind of hard to believe. I mean, it can happen. We see it in this area here where the stochastics is saturated at the top, and it just kept moving up. So this could possibly saturate for quite a while, and move up here. It is possible, but as things are looking right now, it just appears to be more of a bear market. Now, if we look at the 6 week, I think I mentioned this before in the previous in the previous video. The 6 week is showing a back divergence already here, and the stochastic is starting to turn around up here. You can see this movement here. So, and this is starting to turn a little bit here. So I think it seems to me that we're very much near the end of this move. Let's take one more look here. So let's take a look at the monthly. Yeah, the monthly is interesting because we are at a bottom still on the stochastic, even though it moved this much up. We're still at the bottom on stochastic. So this is one of the reasons why people don't like stochastic, is because it is so late. But the profiles the on the surge are interesting. So we had the clear back divergence here with let's make this a little wider. Clear back divergence here, and then the divergence on stochastics for this top, which is a classic signal up here to short. So this right here, this movement here, is not a buy signal according to this system. It just simply isn't. It means what we really want to see is this moving up. I can't really draw it very well. Like this, possibly moving higher, then moving down to produce a a back then front divergence like that. I'm sorry, this is not hard to. This is kind of hard to see. I just don't have the right tool to draw it. But this oscillator should move higher than not as low for the buy signal with a stochastic cross at the bottom. So this is how I see it. So one argument for this to move up is that we have achieved, I've always saying, if you watch my videos, you'll hear me say that the secondary bullish move always gets taken out, and that's exactly what happened here. We had a one move up here, a pullback, and then the secondary move, and that secondary move almost always gets taken out. And whatever happens, sometimes I think that whatever happens right here, the market achieves this balance point, and then whatever happens is it tells you what if the market is bullish or bearish. But another thing that markets do a lot, and which is a basic rule of the market, is that when the previous high is taken out, which happened right here, the market always revisits that high. And it would make sense to me. Also, remember that markets also move in Z's. They move in Z's. So it makes the most sense to me that what we're going to see is a Z pattern down to the previous high. Like that. That would fulfill this rule. And it would produce potentially here, if not one of these back and front divergence signals, but it would produce let's see here. This would come up, spin down a little bit like this. It would come up, it would go down like this, not achieve a low that's lower than here. We could get a potential. This is likely what's going to happen, because this is called a continuance up signal. And what we'd see is this stochastic moving up, this moving down, the stochastic giving a divergence, and then you have your signal to buy down here. So this is what I am seeing. Of course, I would love for the market just to continue to go up, but I don't think it's just the reality at the moment. It's just, it's just not seeming correct to me. So that's all I have right now. I'm definitely not going to be buying up here in these areas, even though we're seeing pretty strong movement up here after the short. But we'll see what happens. I'd hate to see a shot down like this. There's going to be a lot of people in pain, especially the true believers in crypto. And I don't want to really see it, but this is how I am reading the market at this time. So that's all I have to say. Thanks for watching, and good luck in your trading.